Hello, my dear students. Welcome to March-June 2019 SBR paper. This is question number 1. So, as you can see, first paragraph is your background. Next, we have the company's trading information, and then we have accusation. So, this means that we have something to do with consolidation, right? And you are given some exchange rates. That means we have to do translation. And we have also a disposal of a company. So let us read, right? Most of the time, consolidation question will come in your question 1 for 30 marks. So you have to be very well prepared for calculation of goodwill, NIC, accusation, disposal of a company. All this comes in your section 8, 30 marks. Because this area has a lot of areas to be tested on. So it's fair to include it in question 1 rather than any other question, because question number 1, which comes in section 8, is the highest mark, 30 marks. Okay, so here you can see we have some requirements. Requirement A, prepare an explanatory note for the directors of Kabais which addresses the following issues. So what do we have to prepare? Explanatory note. Now don't panic, what is this explanatory note? Good thing is it does not have a standard format, so you can write it anyways. It's just like a note you're explaining. Okay, so there are 3 requirements for part A. First, before I read the requirements, you can see there is a note. So let us read this note. What is it? And any workings can either be shown in the main body of the explanatory note or in the appendix to the explanatory note. So for example, you have some workings where you have to show goodwill, right? So that you can show in the main body also or as an appendix. That's your choice. So first, coming to first requirement, what is meant by an entity's presentation and functional currency? Explain your answer with reference to how the presentation and functional currency of Bakelite should be determined. Right? Let me underline. The main word is presentation, functional currency. This is an area, this is something where a candidate or a student should be able to get full marks. If not full, but maximum, most of the marks, at least 6 out of 7 or 5 out of 7, because I believe that this is one of the easiest area where you have to do translation of financial statements, presentation, functional currency, what is it? Because this is all general knowledge questions. It should not be something very tough. So explain your answer with reference to okay. So with reference to this company, how it should be determined for Bakelite. What will be their presentation currency? What will be their financial currency? How it will be determined? Which is what? So the question is not only what is the functional currency. Let's say there are 3-4 currencies given, okay, for Bakelite. You have to tell which out of this, which is the functional currency, which is the presentation currency. That is not enough. You also have to say how you came to that decision, how you are concluding that, okay, let's say dollar. Dollar is the functional currency for Bakelite. How are you saying it's dollar? Based on what facts? Are there any evidence? So those things you have to tell. That is the meaning of giving reference to, because it is for 7 marks. Just see the number of marks. It's not enough for you to tell, okay, this is the functional currency, this is the presentation currency, and get the marks. You have to tell the factors how you determined. So these factors are common. It is general knowledge. You study from your textbook. Some of you must have memorized it. So those are the facts you have to give here, factors. Coming to the next one, a calculation of the goodwill on the accusation of Bakelite. It is definitely a question will be there on goodwill or impairment of goodwill or something like this. A calculation of goodwill for accusation and what the balance would be at 30th September 2006, immediately before the disposal of shares. Each line is very important, each word, before or after, when there are number of events, number of circumstances taking place. Here you are acquiring, then you are disposing. So too many things are happening. When too many events are happening, make sure at what timeline they are talking about. Here clearly they have specified immediately before the disposal of shares. So whatever is there, we have a paragraph also for disposal of shares if you have gone through that. You don't have to take that disposal part. You don't even have to read it. Just leave it immediately before the disposal part. It has to be very clear. So if you are taking the impact of after disposal, then my dear friends, we are going in the wrong track. So this word immediately before the disposal is very important, right? And the balance would be a 30th September 2006. Date is very important for Goodwill. The date is given because you are given the exchange rate on different dates. You are given an average, closing, opening. You have to decide which exchange rate you are going to use. Your answer should include a calculation of the exchange difference on Goodwill. So usually when exchange the rates are there, there will be exchange differences. So that also have to be included. From when? 1st of January 2000 to 30th September 2006. It is not one whole year. It's for 9 months, 5 marks. Right? Next, an explanation. Now you see the word. It starts with explanation, not a calculation. An explanation of your calculation of goodwill. Of your calculation of goodwill means whatever goodwill you have calculated in the second part of A. Can you see there's a link between this to this? Between this to this, there's a link. You will see this link always. That's why I always advise my students, please follow that order. Don't try to do the third one before you do the second one. It will be very difficult. Plus, sometimes you cannot even do it also because you need that answer of the previous steps answer you need for the current. So always follow. This has to be your number 1. This has to be your number 2. I'm sorry, 1. And this has to be a number 3. This is the way you have to do. First, then second, then third. So explanation. So the keyword here is, I'm emphasizing these words more because I have seen students literally going on the wrong track. Even if it's something which is very easy to calculate, it's nothing tough also. So it's very easy for you to get confused or confuse yourself by easy requirements when you have easy requirements also. Of your calculation on goodwill, that means you need your calculation, whatever goodwill you have calculated. Here you don't have to calculate again, remember that. Here you just have to explain. And the treatment of the exchange differences on goodwill in the consolidated financial statements. Definitely, consolidated financial statements will come whenever there's an acquisition or disposal. So what is that treatment? One is for goodwill, the other one is for exchange differences on goodwill. There are 2 things. If you can identify. Number 1, number 2. You can even write like this also. Annotate it like this also in your exam paper itself. In the question paper you can annotate. You have that full flexibility and freedom to do that. I wonder why you don't take an advantage and why most of the candidates don't do that. They just read the paper, no highlighting, no underlining. Then when you go and start answering your requirements, you come and try to find the important words again. You reread it and waste time. So 2 things you have to explain. How in the consolidated financial statements it will be treated. You do not, and don't stop here. Read the full requirements before you answer. If there are 3 lines, 3 different sentences, you have to read all the 3. Don't stop in the first 2. So you do not need to discuss how the disposal will affect the exchange differences. Do not. I'm sorry, I've cut the word. Do not. So this do not is very important. For disposal, you don't need what is the exchange differences. Alright, coming to part B. Explain why exchange differences will arise on the net assets and profit or loss of the pipeline each year. Explain. My dear, don't calculate when you're told to explain. Yes, of course, you need to do some calculations, but you also have to explain. That is the main thing. If you just calculate and you don't explain, you will not get the marks, even if technically your calculation is right. So explain why exchange differences will arise on the net assets and profit or loss. One is net assets, the other one is profit or loss of the pipeline each year, and how this will be presented within the consolidated financial statements. Your answer should include a calculation. Now, when they say your answer should include something, your answer have to include it. When you don't include and you include all the other things, still you will not get that mark. Remember, specifically when someone tells you, when a requirement tells you your answer should include this, your answer should include that. So your answer should include a calculation of the exchange differences which would arise on the translation of Bakelite, excluding goodwill. So excluding goodwill. Exchange differences you have to show for the translation of Bakelite. Of course, you know this. There's a translation. There'll be a exchange gain or loss based on translation. Excluding goodwill. So the goodwill which you have calculated in part A, that is not here. That's not included. Exclude it and take it. In the year ended 31st December 2006, 7 marks. Part C. Calculate the group profit or loss on the disposal. Now the disposal part comes in part C. So in your part A and B, you are not touching the disposal part. It is very clear which part of the requirement needs which part of the case study. If you can link that, well done, you have done the massive work. 50-60% of the work is done. Linking which part of the requirement is for which part of the case study. So calculate the group profit or loss on the disposal. Group profit or loss on the disposal. Okay, calculation is just calculation. So no need to explain. 3 marks. 3 marks. In 3 marks, what are you expecting? You will calculate and then you will explain. No. If it was for some 7 marks or 10 marks, okay, it makes sense to explain. Now, second, briefly explain how Bakelite should be treated and presented in the consolidated financial statements of the Kabas for the year ended. How it will be treated and how it will be presented in the consolidated financial statements for 4 marks. So now can we read the case study? The disposal part, I'm not reading it, right? Now, so part A, presentation and this thing, okay. So now let us read the background. You all start reading with the background. So Kerbis is the parent company of an international group which has a presentation and functional currency of the dollar. Okay. The group operates within the manufacturing sector. On 1st Jan 2002, Kerbis acquired 80% of the equity share capital of Bakelite. How many shares? 80%. That means 20% is NCI, and overseas subsidiary. So overseas means definitely you have to translate to your home currency, which is Kerbis, right? The acquisition enabled Kerbis to access new international markets. Kerbis transfers surplus work in progress to Bakelite, which is then completed and sold in various locations. Acquisition was not as successful as anticipated, and on 30th September 2006, Kerbis disposed of all of its holding in Bakelite. Disposed all of its holding. That means 0%. All the 80% which they have acquired, they have disposed. Current year end is 31st December 2006. Now, Bakelite trading information. So, Bakelite is based overseas where the domestic currency is the dinar. What is the domestic currency? Dinar. Staff cost and overhead expenses are all paid in dinars. So, staff cost, overhead expenses paid in dinars. Why am I underlining this? Please understand when you're doing something, why are you doing it? Ask this question to yourself before you blindly stop copying me or doing anything. The reason I'm doing is because the first requirement says what is the functional and how do you determine functional and presentation currency for Bakelite. That's why I'm underlining this. Okay. So however, Bakelite also has a range of transactions in number of other currencies. Approximately 40% of its raw material purchases are in dinar and 50% in yen. So 40% purchases in dinar, 50% in yen, remaining 10% are in dollar, of which approximately half are purchase of material from Kerbis, that is a parent. So this ratio continued even after Kerbis disposed of his shares in Bakelite. Revenues invoiced in equal proportion between dinars, yens and dollar. Okay, so revenue, equal proportion, dinar, yen, dollar. To protect itself from exchange rate risk, Bakelite retains cash in all three currencies. No dividends have been paid by Bakelite for several years. At the start of 2006, Bakelite sold additional debt finance as Kerbis was already looking to divest funds were raised from an issue of bonds in dinars, none of which were acquired by Kerbis. Okay. So before I go to the accusation part, by just reading this much of the case study, I can answer my first requirement. Doesn't it make sense that first I finish that and then I go to the next rather than with the whole case study? Because I very clearly know that acquisition of bike light is not important for my first requirement, which is requirement number first part of A. That other requirement comes when I have to answer second and third part of A and also part B. So now I can see what is presentation function concept. Let's see the answer and how it will be determined. Some answer you must have got by now. This is the function, this is the present. Keep it in your mind. Let's see that does it match with the answers given here. Okay. And if your answers are exactly matching with the answer they have written, then clap for yourself. You have done a wonderful job. That means you have understood the concept very well. But if you have got it wrong, no need to worry. You don't have to be sad for it, or don't need to think that, oh no, I am not able to understand this. This is very tough. No, this is a chance for you to improve where you went wrong. Please go back and check why you're not getting it. This is the way you learn. When you know your mistake, correct that mistake there itself. Why this is not the presentation currency, how it is determined. If this is not the functional currency, then how it is determined. Please go check your textbooks, do your revision kit questions again, where this similar type of question is there. Check similar type of questions like this and see how it has been answered and how this is answered. You will see some similarity, some pattern is always there, which will help you to arrive to the correct answer. Nothing to be said. There is no right and wrong here. You're not trying to promote that if you get it right, you are the one who is passing, and if you have got it wrong here, you are the one who is failing. No, does not mean by that. Definitely it's not like that. The moment you get it wrong, immediately reflect, learn. Okay, so now when you are answering what is presentation, what is functional, explain it in different paragraphs. For presentation currency, we have one paragraph. For functional currency, here in the answer itself you can see. Okay, presentation currency, functional currency, different paragraphs, right? So paragraph 1 says the presentation currency is the currency, define it. It is under which IAS 21. Presentation currency is the currency in which the financial statements are presented. So I'm underlining now, I'm highlighting the keywords so that you learn also. So the purpose of this video is not to get right or wrong answers. The purpose of this video is for you to learn, for everyone to learn. In fact, if your answer is right, why is it right? If your answer is wrong, then how to be good, then what is the correct one? Everyone has a chance, room of improvement, so you learn all the techniques, all the answers. It's not just about this answer that once I get it, it's over. No, there are additional things that you have to learn other than the right answers, such as how to write, how to start a sentence, how to end a sentence, how to know which in how many paragraphs I should write, how many lines I have to write, what should be my ending, how do I get the 4 professional marks, how depending on number of marks, how do I know how much I should write. So these are the areas which you have to learn. How do I manage my time, how do I read and write and still be the time constant. So all these things, there are so many things to learn. It's not just getting right or wrong answers that will make you pass. If you're thinking like that, then you have to learn a lot. Okay, so coming back to the answer, it's a quite long discussion today, and also there are 6 more days left for your result. So best of luck for all the ACCA students for your result on 12th of April. Hope the best. Okay, so coming to the answer, the presentation currency is the currency in which financial statements are presented. Financial statements are presented. This is the definition. Do you see how briefly they have defined only in one line? Not even one line also, I think. Okay, for simplicity, okay, just say one line. Just see how in one line only they defined. If you have to define this, you will be explaining this in 3-4 lines, which you should not do. This is a skill that you have to learn. You have to write all the important words, you have to define, but also brief. Keep it in 1 or 2 lines, that's it. because it's easy when you are given more to write. Trust me on this. It's easy when you are given more to write, but it's very difficult when you have to limit your answers into 3 lines or 4 lines, or it's very difficult to write all that also, because it's hard for you to decide what to eliminate and what to put. It's a skill. So the students who have practiced more, all the past papers, all the revision kit, you can tell by looking at the answer how much they have practiced, how many hours they have put into it before they have come to the final examination. Okay, so the presentation currency is the currency in which the financial statements are presented. IS 21, you have to refer IS 21, the effects of changes in foreign exchange rates. You don't have to name the whole, just referring IS 21 is enough. And if you don't remember the number, you can say effects of changes in foreign exchange rates. If you don't remember the IS number, just let's assume rather than writing IS 21, you mistakenly wrote IS 20, or you forgot what IS 21 and you wrote IS 20. Don't do this mistake. Never do this mistake, because IS 20 is something else. IS 20 is something else. It is about government grants and all. This is 21. So changing one number, one digit can change the whole standard. And then you are answering under this IS, you have to refer this. The principles, whatever you wrote is correct, but your IS number is wrong. Trust me on this. Your marks will be heavily, you'll be penalized for this. So never make this mistake. If you don't remember the number, don't take the chance or don't take that risk of writing the number. Just don't write it. But if you remember, then it's very good. Most of the time, 99% I can say students remember the number. It's very unlikely that students will forget or get confused between IFRS and IAS, because you have practiced many times that IFRS or IAS. So it's very unlikely. But even if you forget, then don't put the number. Just write the principle. That's enough. Okay. So coming back, IS 21. What does it say? IS 21. What does the standard say? You have to tell this. Permits an entity to present as individual financial statements in any currency. So IS 21 says you can present a individual financial statements in any currency. There is no limit to that. So it would therefore be up to the directors of Bikelight to choose a presentation currency for its individual financial statements. Now, do you see how you're linking? IS 21, one line, they have given the principle. Any currency you can present. Next, for Bikelight, it is up to their director which currency they want to present their financial statements in. So factors which could be considered include the currency used by the major shareholders. What are the factors? I will underline this. Currency used by the major shareholders and the currency in which debt finance is primarily raised. So these are the two main factors. There are maybe other factors, but these two are the main factors for deciding presentation currency. So here you cannot clearly say this is dollar is the presentation currency or dinar is the presentation currency. No. Functional currency, yes, you can say. Presentation currency can be in any currency. Okay, now coming to the next, functional currency. How beautifully, only 3 lines, 3 to 4 lines only, briefly they have described everything. They have defined presentation currency. They have told under IS 21 what is the rule. Then they have told for bike how they have to decide the presentation currency. The factors they have given. Same way for functional currency also you have to do. Just replicate. Functional currency is the currency of the primary economic environment in which the entity operates. Since transactions are initially recorded in an entity's functional currency, right? The results and the financial position would need to be retranslated where this differed to the presentation currency. So if your functional currency is different from presentation currency, it has to be retranslated. When it is functional and presentation is, but sometimes it is same, so then you don't have to retranslate. But in this case, you do have to. Now, when determining presentation and functional of Bikelight, consideration should be first be given to whether the functional of Bikelight should be the same as Kerbai's. Whether the functional, because that's the parent company, that's the subsidiary, right? Whether this has to be same as the parent company, at least while under the control of the parent. It appears that Bakelite has considerable autonomy over its activities. It appears that Bakelite has considerable autonomy over its activities. How can you say this? That it has considerable autonomy or not? The facts are given in the case study. Read it, you will understand. Despite being acquired to make more efficient use of the surplus inventory, purchases from Covers was only 5% of Bakelite's total purchase. Only 5%. So this itself should tell you how much they have the freedom. Bakelite, being a subsidiary, they have freedom from their parent company over its activity. Because only 5% of the total purchase is from the parent. So revenue is invoiced in a range of currencies. Revenue, yes, they have clearly told is an equal portion of yen, dinar, and what is the other one? I think it's dollar. So revenue is invoiced in a range of currencies, suggesting a geographically diverse range of customers, which although this allows Kirby's access to new international markets, it is unlikely to be classified as an extension of the parent's operation. It cannot be classified as an extension of the parent's operation, even though the revenues are invoiced in range of currencies. The volume of the transactions involved between Kirby and Buy would seem to be far too low to come to this conclusion. Yes, the transaction is not so much between the parent and the subsidiary. It is very low. So Bakelite also appears free to retain cash in a range of currencies and is not obligated to remit the cash to Kirby in a form of dividends. There is no dividend from the subsidiary to the parent, as you can see. There is no obligation for the subsidiary to remit to parent. Also, subsidiary means Bakelite. They have the freedom to retain the cash in range of currencies. So nor does Bakelite appear to be dependent on financing from Kirby. So if you see from the financing part, they are not dependent on the parent company, with other investors taking up the bond issue at the start of 2006. The functional currency of Bakelite does not need to be the same as Kirby's. Therefore, so this is the conclusion they are coming to. The parent and the subsidiary's functional currency does not need to be same based on the facts given above. So when you are giving answers, first you have to describe all the facts and all, then one line give your conclusion that it should not be same. How did you start this paragraph? If you see the starting line, I will underline with a red line. First, consideration should be given where they should first be given to whether the functional currency of Bakelite should be the same as Kirby's or not, and look at the conclusion. After giving all the facts, you are saying it should not be same. That link, can you see? When you go towards the end, towards your answer, that link you have to keep that link. That link has to be there throughout the answer. You cannot lose it. You're starting, you have said something else. You're ending with something else, which does not make any sense. So your answer has to be like this. Coming to the next paragraph. In choosing its functional currency, Bike should consider the following primary factors. So now you are saying it is not the same as the Kirby's. One thing is out. That means whatever the functional currency of Kirby's is, it will not be the functional currency of Bakelite. So how will you determine the functional currency of Bakelite? Question still remains. So in choosing its functional currency, Bike should consider the following primary factors. What are those primary factors? Currency which mainly influences so these are the factors. I'm highlighting it for you. Currency which mainly influences the sale price for their goods. So let's say most of your sales, the prices are good in are invoiced in yen, dinar, dollar. Let's say dollar. So dollar will be your functional currency. Okay. Next, that's not enough. Primary factors, plural. There's more than one factor. This is one factor. Next, currency of the country whose competitive forces and regulations determine the sale price, and also the currency which influences labor, material, overhead cost. So you have to see in which currency is your labor. That means your staff cost, or your material is, or your overhead cost. So the currency of country whose competitive forces and regulations determine sale price, also currency which influences labor, material, overhead cost. So the key determined here is the currency which the majority of the transactions are settled in. If your majority of the sales are invoiced in dollar, dollar is the functional currency. This is the main idea what they are trying to say. So it depends on currency which is the majority of the transactions are settling. That is the main key determined here. So bike light invoices and is invoiced. Invoices means its sales and its purchases, and is invoiced in a large range of currencies. It's not just in one currency, they have three currencies. And so it would not be immediately clear as to the appropriate functional currency. So in this case, if something is not very clear to you, mind you students, you have the freedom and please say it's not very clear. Don't try to answer. It's not like black and white or yes or no or true or false type. We always try to limit ourselves to one. If this is not the answer, then that is the answer. No, it's like a gray area. There could be a range of answers. Sometimes it's not clear, then you say it's not clear. It's very hard for you to decide whether this or that, because here they didn't give you that majority of the sales are in this currency or majority of the costs are in this currency. Clearly they didn't mention. They have given that it's invoiced in range of currencies. So with that line, how can you tell? It's very unclear, right? So please write it, because the answer also it's right. It writes in the answers. So follow the answer what is given to you. So it is not immediately clear. It is not clear. If it's not clear, not clear. What is the appropriate functional currency? Nor is there detail about whether there's a currency in which competitive force and regulations could be important. They didn't mention about it. We do not know, for example, what currencies buys major competitors invoices in. We didn't even know also. All this fact is not given. So when something is not given, please write it. That these details are not given. Therefore, we cannot determine the functional currency. If you can determine the functional currency, also you have to tell these things are there. Therefore, this is the functional currency. Now, secondary factors. These are secondary factors. What are the secondary factors? Include the currency in which financing activities are obtained and the currency in which receipts from operating activities are retained. Can help guide the entity which is where it is not immediately clear. So if from the primary factors you cannot tell what is the functional currency, don't worry, there are some secondary factors to consider as well. Consider those as a guiding factor for you to decide what is the functional currency. In relation to bike, a significant volume of their sales are invoiced in dinar. Significant volume of sales in dinar. And the majority of the expenses too. Given that wages and overheads are also paid in dinar. So wages and overheads. Expenses means what? It will cover overheads and wages also in dinar. So funds were raised in dinar. Even funds were raised in dinar from the bond issue. And so it would appear that the dinar should probably be the functional currency for bike. So here they have, this should be the functional currency for bike limited. If you see the answer also, okay, see the answer. They didn't say dinar is the functional currency for bike limited. It's not clear cut. Your answer should never be in any SBR answer or any paper in ACCA. Professional papers when you are answering, you will never see clear cut that this is the answer or that is not the answer. It is somewhere in between, right? So the answer is, it would appear that the dinar should probably be, there's a probability. It's not 100% certain. Okay, you can never be certain. So it appears that dinar should probably be the functional currency for bike light. So write your answer in this way, this form. In any SCCA paper, you take AFM, you take ACCA, SBR, audit, SBL, it's, you are giving the answers like a probability. This should be the, this can be, this may be based on the facts. You are never saying this is the answer. Never like that. So it is also possible that bike, right, that bike may lose the autonomy on by sales of their shares, which could have implications for the determination of functional currency. Obviously this line will not come in your mind when you're writing answer, because your answer is you have stopped. So when if you have stopped here, by the way, still you will get the full marks if you didn't write the last sentence, because it is very unlikely that that last line will come in your mind also, because your concern is about finding the functional currency. Why do you care what happens later on? What is the probability of this not happening? But some of you might have thought about it, then you can write it as well. There's no harm, right? Next is your calculation of goodwill. So goodwill in dinars on the acquisition, so it will be in dinar, functional currency. On the acquisition of Bakelite would be 42 million dinar, 42 million, calculated as follows. So this is in dinar millions. First is consideration, then is fair value of NCI less net assets at acquisition. Just write all this. You know the formula for goodwill. So what is the consideration? Keep it there. We'll read, because we didn't read this part. Acquisition of Bakelite, right? So Kaba has paid dinar 100 million for 80% for the share capital of Bakelite on 1st of January 2002. How much they have paid? Dinar 100 million. This is the consideration, 100 million. The net assets of Bakelite at this date had a carrying amount of dinar 60 million. So net assets 60 million dinar. Okay. At this date, 1st of January 2002, the only fair value adjustments deemed necessary was in relation to a building which had a fair value of 20 million above its carrying value and a remaining useful life of 20 years at the acquisition date. Whenever there's some adjustments to the net assets, right? Fair value adjustment for the net asset, you have to do that adjustment. Like here, building had a fair value of dinar 20 million above its carrying amount, that is more than 60, right? And useful life 20 years. Covers measures NC at fair value for all acquisitions. So you know that NIC you can measure by using two values. One is known as full goodwill, the other one is partial goodwill. This is at fair value, that means full goodwill. And the fair value is definitely 20% was estimated to be dinar. So this is the NCI at fair value, 22 million. Due to the relatively poor performance of bike, it was decided to impair goodwill paid by dinar. So impairment is there. 6 million during the year end 31st December 2005. From 2000, 1st of January 2002, 31st December 2005. So many years in between there. So rates of exchange has been given to you, right? If it is 1st of January, it is $1 is equals to 0.5 dinar, like that. Average rate is given 31st December 2005, 6 raise an average rate for the 9-month period is given. Now disposal part I'm not taking it, that is for part C, so let's keep it for part C. But goodwill we can take. So goodwill consideration is 100, fair value of NCI is 22, net assets 60 plus 20 because of that building, right? Adjustment. So goodwill at acquisition is 42, but this is in dinar, right? You have to take it in dollar as a parent company, right? Because parent company is this one is dollar, functional currency. So on accusation, the goodwill in dollar would be on accusation 42 divided by 0.5, because the starting rate on 1st of January 2006, sorry, 1st of January 2002 is this. And accusation is also 1st of January 2006. So opening will be 0.5. That is 84 million in dollar. But in dinar, it is 42 million. Goodwill on 30th September 2006. So goodwill on 30th September, you want to find the balance, right? That's what the requirement says. If you have forgot, let's read the requirement. Calculation of goodwill on accusation that we have done. Balance on 30th September 2006. Right? And in exchange differences also will be there from 1st of January 2006 to 30th September 2006. That is for 9 months. So here you have to take the 1st of January 2002. So goodwill on 1st of January is 42 million dinar. You are taking the rates and in dollar. So 3 columns you have to mention. Whenever this goodwill translation is there, please maintain that column format. First it is in dinar, then the rate, first column, second column, and third column will be in dollar million. Next, so 42, and impairment was 6 on 31st December 2005. 6. So that impairment will be changed at what? This is to 0.245. We have got 84 already. 0.4. What is the rate for impairment? You have to take what rate? Average rate you have to take for impairment. Because why is it average rate for impairment if you don't know the rule? Impairment, where does impairment of goodwill comes? It comes as expenses. It is an expense, it comes in income statement. And income statement, the sales or the expenses, all income and expenses comes at what rate? What rate do you use to translate? Average rate in the income statement. That's why we have to use average rate for impairment. Some of you might say that closing rate because goodwill is used at closing rate. But let's go by the average rate, 0.4. So 0.4, you are using it, 6 divided by 0.4, 15 million. Deduct the impairment, right? 25.7. That is the balance. Okay, we'll see how. Okay, we'll work on the exchange gain part a little later. So goodwill, after you deduct 42 by 6, 31st December 2005, it will be this 36. Then it will be 0.38. How? 31st December 2005 rate is 0.38. So when you take 36 divided by 0.38, it will be 94.7. Right? So that's why this is the balance. So first, before you get this exchange rate, by the way, before you get this exchange rate, first you have to work out this part, 94.7, the closing. After that, go backwards. So 84 minus 15 will be 69. 69 plus 25.7 will give you this closing rate. Therefore, the exchange gain, it's a gain. Why? Because goodwill in the year end increased. Because 84 minus 15 is 69. But at the year end, it increased more than 69. Therefore, it's a gain. Exchange gain, 25.7. Positive balance, so it's a gain. Next, current year exchange gain. How much it will be? 30 September. So when you have to get the current year exchange gain, go to the next year. From 31st 2005 to 30 September 2006. That's your gain. So goodwill will be same because there's no more impairment will be there. The rate will be 0.35. 30th September 2006 rate. This is 0.35. 30th September 2006 rates, right? Which is 102.9. So 102.9 and this, it increased. So that's why this is also a gain. This 8.2. So first you have to calculate opening and closing. The difference, the balance will be your gain or a loss. If the closing balance is more than the opening balance, it's a gain. Like in this case, goodwill increased, right? You will be more happy if the goodwill is higher the year end, if it increases. So it's a gain. Therefore, exchange gain is there. Workings. Here they have given you the workings also. You can also present your workings like this. When you have workings like this, make sure that working is separate from your main table. Don't put workings in the main table, otherwise it looks very clumsy, very untidy, and very unclear. You don't know what is the working, what is the main answer. So working like this, keep it separate, write it as working and then show. Like 6 million, when you translate using 0.4, it is 15. Goodwill, when you translate it is this, and this when you translate it is this. Next is the next you have to explain how this will be treated. If you have forgot, no problem, you can always come back and reread the requirements. It's a good technique, by the way, right, of rereading. So explanation of how this will, and exchange differences will be treated in the consolidated financial statements. So in a business combination, goodwill is calculated. We all know what happens when it's a business consolidation. Goodwill will be there in the financial statements, and exchange differences, where it will go and where it will be recorded and all. So in a business combination, goodwill is calculated by comparing. What are you saying? Now you are writing how you calculated that goodwill. You are explaining. This explanation has to be there. Goodwill is calculated by comparing fair value of consideration plus the workings which you have done here. This table, can you see this table? Consideration plus fair value of NCI minus net assets at acquisitions goodwill. Same you're writing in sentences in words. There need calculation, here writing in words. So goodwill is calculated by comparing fair value of consideration plus NCI at acquisition with the fair value of identifiable net assets at acquisition. Fairbuys measures NCI using fair value method. Correct? It is in the case study also they told. So this means that goodwill attributable to the NCI is included within the overall calculation of goodwill, because fair value, no? Fair value means goodwill for NCI will also be there in that goodwill. So an adjustment of dinner 20 million, that fair value of net assets, is required to the property of bike light to ensure the net assets at acquisition and property are included at their fair value. Now, at the year end, all assets and liabilities are retranslated using the closing rate of exchange. In your balance sheet, your monetary assets and liabilities will be translated at closing rate. It's a rule. If you haven't, go to IAS 2021 and read the rules. In your textbook, it's there. For each item, which rate you have to use to retranslate at the year end. Assets and liabilities are retranslated using closing rate. Exchange differences arising on the retranslation are recorded within where? Exchange translations are recorded within equity. Since NCI is measured under fair value, exchange differences will be apportioned 80-20 between the owners of Fairbuys and NCI, exactly. So that exchange differences which you got is not only for the parent, it includes both. It is there NIC also for parent also. Now you have to divide 80% for parent, 20% for NIC. That exchange differences that you have to write between the owner and NCI. Only the current year's exchange differences would initially be recorded within other comprehensive income. Where do you record it? Exchange differences. Not in exchange gain, you don't record it under income, or exchange loss, you don't record it under loss expense. You record it under other comprehensive income. This is a gain, right? So other comprehensive income, the current years, not the previous years, all those ones. This is a current year. So for this year, exchange differences will be recorded other comprehensive income. Write the year also. Very important that you write the year. For which year? Year ended 31st December 2006. Whereas cumulative exchange differences on goodwill. Cumulative exchange differences on goodwill at 30th September 2006 would be recorded within equity. It's a rule. Current year will be recorded as other comprehensive income, but cumulative differences on goodwill for 30th September 2006, where will be recorded? Within equity. Because clearly they have mentioned from 1st of January 2006 to 30th September 2006, until 30th September 2006. Next, part B. Explain why exchange differences will arise on net assets and profit or loss at bike each year and how they will be present in consolidated financial statements. Okay. So now part B. You also have to do a calculation. Before you do a calculation, let's explain the first part. So the net assets of bike should have been retranslated each year. Net assets, definitely. It should be retranslated each year at the closing rate of exchange. Which rate? Whatever is there in the balance sheet comes in closing rate. Net assets comes in the closing balance sheet. So it will be retranslated at the closing rate. There is therefore an exchange differences arising each year. Definitely there will be, because each year closing rate is different. So each year when you retranslate, the exchange difference will be different. It will arise. There will be exchange differences arising each year by comparing the opening net assets at the opening rate of exchange rate with the opening net assets at the closing rate of exchange. Because opening rate is different, closing rate is different. When you compare it, there's a difference. That's why that exchange difference will arise. So an additional exchange difference arises to the profit or loss of bike light each year being retranslated at the average rate of exchange. Definitely, profit or loss you translate at average rate. Therefore, profit and loss at average rate, financial statement in closing rate, differences will arise because the rate is different. In the consolidated statement of comprehensive income. So the profit or loss will increase or decrease the net assets. Definitely, profit or loss, what does it do? It will increase if it's a profit or decrease if it's a loss, the net assets of bike respectively, which as is indicated above will be translated at the closing rate of exchange within the consolidated statement of financial position. When you're taking in the consolidated statement of financial position, it will be translated at the closing rate. after you take the profit or loss. For the net asset, you increase or decrease by the profit or loss. After that, you translate a closing date. In the consolidated statement of financial position, as with goodwill, they have told you exclude goodwill, but with goodwill, what do you have to do? Exchange differences are included within equity, with 80% attributable to the shareholders and 20 to the NCI. Right? Because goodwill is recorded using full goodwill method, NIC at fair value. If it was a partial method, the second method of valuing goodwill, then it's different. Then wholly it will go to the parent, whatever it is there. But this goodwill, it includes both. So from there you have to take 80% for parent, 20% for NCI. So cumulative exchange differences will be included within the consolidated statement of financial position, with just current year differences recorded within other. So only the current year difference will be recorded in other comprehensive income, but cumulative will be recorded in the equity. And where it will be recorded, consolidated statement of financial position. Next, what is it? So the carrying amount of the net assets of BIC on 1st of January 2006 were at 48 million. Carrying amount of net assets. Is it so? Dinar. Here, for that we have to read the disposal of bike light. So Kerber sold his entire equity shareholding in Bike Light on 30th September 2006 for 150 million. How much it sold? 150 million for. That part will come later. Further details written in disposal as follows. So here from the disposal, since they have disposed wholly, so you can take what is the carrying amount, what is the NCI here. So carrying amount of Bike Light's net assets at 1st of January 2006 was 48 dinar. Loss for the year 31st September 2006, 8 million. Cumulative exchange gains 74.1, and NCI 47.8 million on 1st of January 2006, before they have disposed, because they have disposed on 30th September 2006, but these are the amount given on 1st of January 2006. So from here, so the carrying amount of net assets was 48 million. They have given the fair value of their operating net assets, therefore would be 64 million. Fair value opening net of their opening net assets, therefore would be 64 million dinar. How 64 million dinar? How 64 million dinar? Opening is 48 plus 16 divided by 20 into dinar, 20 million. $48, okay, opening. How 16 into 20 into dinar, 20 million? Sorry, plus 16 into 20 into 20 million. 60 over 20. They are taking the depreciation part. Here they have told that 20 million above is carrying amount, remaining useful life of 20 years at the acquisition date. So when they have acquired it, 1st of Jan 2002, and when are they selling it? September 2006. So calculate in terms of year. 2002, 3, 4, 5, 6, not full year, right? Because it's only for 9 months of 2006. So it is 4 year and 9 months. But we are not taking the 9 months. We are only taking 4 years. So you from 20 years when you have acquired it, deduct the 4 years. Therefore it will be 16 now over 20, which you have to depreciate. What is that fair value of this? It will be 20 into 20 for that property. That's why they have taken here 16 in, wait, let me highlight it. 16 into 20 into 20 million. 16 over 20 into 20, yes. With that, you add 48 opening. So buy light would already be consolidated for the first 9 months. Definitely for the first 9 months, because after that you're disposing, right? Before disposing, you can consolidate. So for the first 9 months, they will consolidate since Kabas lost control on 30th September. So they loses control. You have to decide on which day the parent loses control. Loses control on 30th September 2006. So from 1st of January 2006 till 30th September, they are consolidating. After that, they cannot. So losses per the individual accounts for the year ended 31st December 2006 were there 8 million. What dinner 8 million is given there in the table. They have taken the full 1 year. But out of that only, how much they can consolidate? Only for the first 9 months. So only dinner 6 million would be consolidated. Because 9 months, 9 over 12 into 8. 6. So additional depreciation of dinar 0.75 million would be charged for the first 9 months for the year. There will be additional depreciation. How much it is it? It is this much. It will be charged for the first 9 months of the year. This one. You are taking 9 over 12 because for 9 months. And 20 million. For 20 years, useful life is 20 years. So that for that current year, for that 20 million is the value of the property, divide by 20 years. Because only for 1 year, that current year you have to find out. So 20 divided by 20 is 1. But only for 9 months, not for 1 whole year. That's why 9 over 12, so 0.75. So net assets at disposal in dinar would therefore be dinner. Always write the currency. If you see, always they are writing the currency before the number. Don't just write number. It's very easy to get confused which currency you are relating to it. I have some students, they are writing the depreciation in one currency, net assets in some other currency. It's very wrong thing to do. You have to keep this in mind, right? So how they are getting it? Net assets at disposal. Fair value opening net assets. Just now they have calculated here 64 million. They have shown the working in the bracket. So 64 opening minus 6.75. How 6.75? Because the losses and the depreciation. Additional depreciation is 0.75. Loss was only 6 million. So 6 plus 0.75, 6.75. You deduct it. So the exchange difference arising in the statement of comprehensive income for the year end 31st December 2006 would be this much. 13.4 million calculated as follows. This is this one. How they have got that? Because you have to give the exchange differences also. They have told clearly in their requirements. So opening net assets at opening rate. Definitely opening net assets will be an opening rate. Loss, it's an expense, it will be an average rate. And current year, that's a balance. So there you don't have to use any rate. So what is the opening rate is 0.38. Average is 0.37. Right? So opening is 64. Loss is 6.75 because we have additional depreciation also in this. So deducted. And then keep a line, keep a space, and then go find the net assets. Net assets are 30th September 2006. We have got 57.25. Right? You take the closing 30th September 2006 balance and translate it. It will be 1. So the difference is current year exchange gain. It's a balance. The balance is positive. Because when you add 13.4 with this, then you will get 163.6. So whenever positive, the balance is positive, it's a gain. Balance is negative, it's exchange loss. That's a way to understand whether it's a loss or a gain. So now, how much of this exchange differences will go to the parent and to the NCI? Because in the consolidated financial statements, what is the treatment? That's why you have to write this. How much it will go for the parent, how much it will go for NCI. So that finally you have to write. So 10.7 million of the exchange difference attributed to the shareholders. How? That exchange difference is how much? Gain 13.4. Out of that, 80% to the parent, 2.7 for NCI. 20%, right? Next, part C. So the group profit or loss, this is small part and it's highly calculations. Okay. Okay, so group profit or loss on disposal. So what is the proceed? How much you have disposed it at 150? I'm putting a tick mark. Next, net assets. You see, if you follow this in order, because you need this from part B and this from second part of A. This is why it's very important that you follow that order, the way the requirement is presented to you. So net assets at disposal. You're selling it. What is the net asset and goodwill? So net asset at disposal from part B. This one. 163.6. Deducted goodwill at disposal. What is goodwill at disposal? 102.9. Second part of A. Whenever you have something where you need the previous answer, refer this also. Write from which part so that it's easy for the examiner to see from which part you are taking it. Or part B or part A. So goodwill at disposal is how much? This one. Because you're disposing at this date, right? So 102.9. Because it will be now gone. You will not have that net assets also. You will not have that goodwill also in your company. That's why you have to deduct it from your profit. Next, NCI at disposal. This definitely will be there. That's why you're adding it. 48.5. 48.5. Let's see how 48.5 it is. NCI. Okay. Okay. An exchange gains recycled to P&L. Remember, this term you have to understand. NCI disposal will come to that shortly. Exchange gain recycled to P&L. When you are disposing, right, whatever the exchange gains previously you have from the subsidiary, once you're disposing the subsidiary off, that exchange gain which is there in other comprehensive income. We know that exchange gains will be in other comprehensive income, will now be recycled, will be posted where? Profit and loss. But the condition is that you have to dispose it. When the subsidiary is disposed, at that condition, that time only the exchange gain will be recycled to profit and loss, which is 76.6. 76.6. How you're getting this exchange gains recycled to P&L? 76.6. The workings are here. The workings are here. So exchange gain on 1st of Jan per question was this. They have given in the question. Current year exchange depends on goodwill are this one. CB, this one, 8.2 million. And net assets was this much. Okay, so cumulative exchange gains on 30th September was this much. You can see your part B, CB. Okay, let's read. See this 8 point, I'm sorry. See 8.2, current year exchange gain 8.2. And the cumulative is how much? 94.7. Right, goodwill on 31st December 2005. 95.7. On disposal, the parent share, how much is parent share? 80%. Would be recycled to P&L, 76.6. That means 95.7. From 95.7, you're taking 80%. 95.7, this one. Sorry, cumulative exchange. Okay. Now NCI. So NCI per question is 47.8. Okay. NCI share of loss. So you're having a loss of 6.75. Out of that you're taking 20% because NCI is for 20%. And it's in dinar. So when you're calculating in dollar, you have to divide it by 0.37 on 30th September 2006 rate. So it will be 3.6. Next, the gain. So the NCI share gain exchange. Okay, share exchange gains for the 9 month to 30th September 2006. So it will be 13.4 and 8.2 from goodwill and exchange gain, and take 20% at it, and this will be your goodwill on 30th September 2006. This is an easy working, right? So 8.6 is the group profit on disposal. Okay, so the how you got the cumulative exchange gains, add 74.1 with the opening plus your goodwill 8.2 and your net asset 13.4, and you will get 95.7. So that's for part second, and the last part of C, and last part for this video also is this. What is it? What is the requirement? How it should be treated and presented in the consolidated financial statements. Briefly explain how bike light the whole company. Now, so for the year ended 31st December 2006, Kerbers will consolidate bike light for the first 9 months. How many months? First 9 months it will consolidate. For the year up to the date of disposal of the shares and subsequent loss of control. Very important that you write these words. I will highlight it. One is date of disposal of shares, the other one is subsequent loss of control. Yes, definitely they have an 80% holding and they are disposing the whole 80%. It's a loss of control. You have to write it. Why you're not? Because when you're having a loss of control, that point only you're not consolidating. Otherwise, consolidation have to be done. When you are subject to consolidation and you're not consolidating, you're not following the IFRS. It's wrong. Only when you're disposing, you're losing control, then only you stop consolidating. You don't consolidate for that part from that day onwards. So NCI will be calculated on the first 9 months of losses. You have to write this. Exchange differences on the translation of net assets, profits, and goodwill in relation to the 9 months to 30th September 2006 will initially be recognized where? In other comprehensive income. Initially, the exchange differences. Now that exchange differences is from the translation of net assets, profit, goodwill for only the 9 months. But later, it will be reclassified. Initially, it will be classified in other comprehensive income, but it will be reclassified subsequently to P&L. This you have to write. It's a must that these words are there in your answers. That's why I'm highlighting it. It's not optional that if you want you write, otherwise you don't write. It's compulsory that you have to write. On 30th September, so you're writing for this year 1st December 2006, what you're doing. Now coming to 30th September 2006, the date when disposal happened. A consolidated profit or loss on disposal will be calculated in the consolidated financial statements of Kerbis on this date. Write the date. Date is very important. Yes, definitely. Consolidated profit or loss will come there. This you have to mention. Because consolidated financial statements is not only balance sheet. It also includes consolidated profit or loss. Right? In effect, write the name of the company, please. It's a parent company you have to write. It's a group company, right? So in effect, the proceeds are compared to the net assets. What are you writing? You are saying the proceeds are compared to the net assets and unimpaired goodwill, not attributable to the NCI at the disposal date. This line, what is there? You are saying this only. This working, what you have done here. Proceed minus net assets minus goodwill minus plus NCI plus exchange gain. Because it's a group profit and loss, right? So that group profit on disposal will go in the consolidated profit and loss. That's why you're writing it. So the cumulative exchange difference on the translation of bike would be reclassified to P&L. Now, the last paragraph, consideration should be given as to whether the disposal of bike would constitute a discontinued. So this disposal is whether it's a discontinued operation or not. Consideration has to be given there. So for bike light to be classified as a discontinued operation, it would need to represent a separate major line of business or geographical area of operations. So all these are from there. IFRS 5, sale of non-current assets, discontinued operation or something like that is there. Yes. So this discontinued operation is in under IFRS 5. You read, you will understand. How do you classify a discontinued operation? So for bike light to be classified as discontinued operation, you have to see whether there's a separate major line of business or geographical area of operation. Since bike light was initially acquired by Carbis to gain easier access to international market, it is likely that the criterion would be likely, always in probability terms you are answering, that criterion would be met. That means what criterion? That it will be a discontinued operation. Because before bike light bike light was acquired by the parent Carbis, they were having already a market, international market. That means it's a separate line of business they have. It could be discontinued. The reason why the parent acquired the subsidiary was to gain access to international market, easier access. That's why this criterion is met. Therefore, it will be discontinued operation. Right? So that's it for this video. And please go and check the marking scheme. It will tell you what are the points and how many points you have to rate. I'm not including it in my videos, as I feel that this much is enough for you to get a vast understanding of how to answer. So don't forget to subscribe to my channel, and I'll be coming with question number 2, 3, and 4 also of this paper. Till then, take care. God bless.